Welcome back to MB Capital Strategies. Today we have an analysis of one of the largest commodity companies in the world, namely Vale. Many people talk about BHP or Rio Tinto, but Vale is the cheapest of the three. Extremely profitable and currently experiencing some really exciting developments in the base metals segment. Today we'll be talking about Vale's fundamental figures, dividend and cash flow. The valuation, the risks, the expansion in nickel and copper, and the new 10% withholding tax starting in 2026. All completely data-driven and without unnecessary noise. Vale is Brazil's commodity giant. Massive in the areas of nickel, copper, cobalt, and base metals. Supplies raw materials for steel, batteries, infrastructure, and energy. In short, Vale is a cornerstone of the global economy. And that's exactly why the valuation is so exciting. Let's first take a look at how I invested here. My entry price was €9.17 with a total investment of €981.68. I hold 107 shares. Currently, there's an unrealized gain of 19% and a dividend already received of €47.95. And the valuation right now, it's absurdly cheap. InvestingPro gives it a fair value of €15.10. Analysts have set a target here of €11.71. The current 52-week high and low are between €7 and €11. In addition, we have a P/E ratio of 9.1, a forward P/E of 6.3, and an EV to EBITDA of 4.5, and we have a price to book ratio of 1.23. For a global commodity leader, that's cheap. Vale is objectively the cheapest large cap miner in the world. Now let's take a look at the fundamentals over the last 12 months. We have revenue of $209.6 billion. We have operating profit of $55.5 billion. And we have net income of $29 billion. EBITDA of $71.6 billion. That's really strong. Vale remains massively profitable despite the iron ore cycle. Now let's move on to the margins. Here we have a gross margin of 36%, an operating margin of 26%, and we have a net margin of 14%. That puts Vale clearly above the sector average. For comparison, global mining has a net margin between 7 and 12%, while Vale is at 14% net. That is very efficient, despite fluctuations in the iron ore price. Now let's move on to the base metal segment. Now the most important part which many people don't understand. Since 2023, Vale has been investing heavily in the so-called base metals segment. What are base metals? These include nickel, copper, cobalt, and zinc. And these metals are needed for batteries, electric motors, energy and infrastructure, power grids, charging infrastructure, as well as construction and industry. Nickel and copper are basically the steel of the future. And now the exciting part. Vale delivered over 30% better results in the base metals segment last quarter than expected, than analysts had expected, according to the InvestingPro report, which we also have open here right now. This is a massive indicator that Vale is diversifying in the long term, moving away from being purely an iron ore play. Why is this bullish? Energy infrastructure is booming worldwide. A copper deficit is expected starting in 2027. Nickel boom driven by batteries. High prices, long-term demand. Vale is strategically excellently positioned here. Now let's move on to the dividend. It is solid but fast-paced. We currently have a dividend yield of about 5.75%. A payout ratio of over 64%. It's important Vale pays out what it earns. That means, boom, years bring big dividends, weak years bring smaller dividends. This is normal in the commodities sector and not a sign of weakness. So let's just take a look at the dividends in general here. Currently, for this year, we have 38 cents. Last year, we had 83, 33, 50, 85 cents, €1.34, €2.31. So we can see that the dividends fluctuate quite a lot. But overall, over 10 years, we've seen growth of 3.19. We also have to accept that the dividend can be reduced, as we can see here right now. So, as I already mentioned, it's a cyclical game. Free cash flow has been weak over the past few quarters, sometimes even negative. Why? Because working capital is being built up. There have been high investments in the base metal segment, and we had a weak iron ore price in the summer. But now comes the outlook from Scotiabank and InvestingPro. According to these, the free cash flow yield is projected to be 9.1 in 2026 and 12.2 in 2027. And those are very good figures. Now let's move on to the risks, and there are 3 real risks. First, iron ore price volatility, because it's always tied to China. If China sneezes, the price falls, and right now we also have legal risks. Mariana and Brumadinho are still ongoing. InvestingPro shows a potential $1.4 billion liability here. Third, the debt. Net debt is at its highest level since 2019. Not critical, but noticeable. And then we have the new Brazilian 10% withholding tax, starting in 2026. A topic that is very current right now. The Brazilian Senate has passed Bill 1087-2025. It is now only waiting for the president's signature. What does that mean for us, investors? Since 1996, dividends in Brazil have been tax-free. Starting in 2026, a 10% withholding tax will be introduced. And this affects Vale, Petrobras, and all Brazilian stocks. In short, you'll receive a bit less in dividends, but it doesn't destroy the investment logic. Now let's move on to the analysts' estimates. Overall, the analysts are positive. We have a total of 15 buy recommendations, 8 hold and 1 sell. And the average price target here is €13.05. That's conservative. The fair value is higher. And then we also have the peers comparison. Vale is the value play. In direct comparison, BHP is stable and expensive. Rio Tinto is solid and expensive. Fortescue is highly profitable but very volatile. And Vale is currently the cheapest major miner worldwide. What is my long-term thesis? Vale remains a strong cash flow giant. What I do like, however, is that the valuation is extremely low, base metals are outperforming, the dividend is strong, iron ore remains profitable, and in the medium term, free cash flow will increase. We have fair risks and clear opportunities. It's not hype, but a massive value play. So what is my conclusion? For me, Vale is a highly profitable commodity giant. Extremely attractively valued, strong in the base metals segment, solid for cash flow with a moderate tax disadvantage starting in 2026. But still very attractive in the long term. Of course, this is not investment advice, but simply my strategy in case you also want to use InvestingPro. Currently, there is a 60% discount only today plus an additional 15%. You get the discount through my affiliate link, which you can find below in the video description. If you enjoyed the video, feel free to give it a like and write in the comments whether you have it in your portfolio or not. See you in the next video. Hard assets, cash flow, and facts. I wish you successful investing.